to talk more about the Elliott wave, of course, but we're going to talk more about the reversal aspect of the Elliott wave. So I've been trying to steer you clear from the horizontal channel because it doesn't really fit our Elliott wave pattern. Horizontal channel would have failed here. Would have failed here, never coming back to the old highs because it was a head and shoulders pattern, and would have failed here because it was a continuation of an ABCD pattern. And that's why double tops, double bottoms, and those things don't have a high success rate because they are more exceptions than the rule. It's kind of like learning to read. You can read poems, you can read stories, you can read adventures, you can read, but you first have to learn consonants and vowels. And then you start to put all those consonants and vowels together, and then what happens? You create words, and out of those words, you see pictures, the stories are illuminated for you. Well, that's the same with the stock market. You have consonants and vowels. Consonants, Elliott wave. Vowels, ABCD pattern. Consonants make up the bigger portion of the word. Vowels are intersected in between there, showing that pause, like the Elliott wave ABCD pattern. And that's why some people will say technical analysis is like astrology, right? Because it's not defined exactly. There's some gray area in there. It's like spelling no. Who would put a K in front of that? But it's there and we spell it that way, but we don't say it that way. And that's why I use the Elliott wave and ABCD pattern to read the charts, but not as a signal to define where I enter and exit. So you should take horizontal channels out of your mind, out of your system. Only use it as targets back to old highs to exit the trade. So for me, I want to catch the most amount of money that I can. So I take a down channel and I'm looking for reversal patterns that will get me into that long up channel of the Elliott wave. Or I take an up channel and look for the pattern that would take me into an ABCD pattern to the downside. So when we look at this transition right here from one to the other, we have to consider what is the pattern showing. One is a head and shoulders pattern. Two would be a wedge. If price breaks above that wedge, that would identify a wolf pattern. Last is a harmonic pattern, which would show the Fibonacci extension, and that would show some resistance, and then price could change. First one, wedge pattern, and you can see that price holds this support level, but squeezes together, making lower highs as it's making lower lows. Once it breaks out, you use the old highs as targets. Next, when price comes out of that falling wedge, like we said, it would come up into this old resistance, then back down, giving you a head and shoulders pattern as a support bounce back up into this new Elliott wave, using this old structure as support and resistance. So you have leg 1, pull back leg 2, trend continuation leg 3, pull back leg 4, trend continuation leg 5, which brings you into the top of this falling wedge resistance. The brother to the falling wedge is the wolf pattern. You have support twice. It breaks below that support, then takes back off to the high side, comes back into resistance, and you take profits. Why do you take profits? Because you know you're going to have a pullback at resistance. Where to? Off of this old resistance makes new support. So the wolf pattern would be leg 1, pull back at resistance, leg 2, bounce at support would start leg 3 of the Elliott wave. Last is butterfly and crab pattern. The only difference is a butterfly pattern would stop at a Fibonacci extension of 127. A crab pattern is going to go all the way down to a 161. So just like the others, you're going to have support. It's going to come into that support, and once it hits that support, price will move back up into the old resistance level, pull back, then take off again, making leg 3, giving you yet another head and shoulders pattern. Why? Because it's repeatable. Try to spell a word without a vowel is the same way as trying to trade stocks without pullbacks, support, and resistance. Elliott wave is the way you read the stock market. Patterns help you identify where you're at on the charts. And remember, where you're looking at will give you the biggest move, and that's what you want to make the most amount of money. But you want to learn this right here, this topping pattern, because you'll save money. If you don't get out of a trade when it starts showing a head and shoulders, you're going to lose up to 50 to 60% of your money as this comes back. And that's why a lot of traders lose money, because they enter on this little pullback or this breakout. They're so happy that they made money on the run up that they forget to sell. Price nearly comes back to where they bought it, so they sell, just making 5%, 10%, and then the stock rallies out and makes a huge run again. All right, so let's just go through and identify what we see for Elliott wave, what we see for patterns, wedge patterns. You have 1 down, 2 back up, 3 down, 4, little stutter pattern, till you hit number 5. Was this a wedge pattern before coming out? Yep. But if you would have tried to trade this as a double bottom, you would have lost as price went down. And remember, Elliott wave is done on different time frames. So what do we have here? We have leg 1, 2, 3, 4, 5. That's a small Elliott wave in leg 1. Then what do you have? Leg 2 pullback. So that 5 steps right here made leg 1, then pulled back into leg 2, went up to leg 3, made this pennant pattern for leg 4 before going into leg 5. Then what? Leg 1 down, leg 2 back up, leg 3 down, leg 4 back up, leg 5 completion. Leg 1, leg 2, leg 3, leg 4, leg 5. So like we went through those examples, you could see for yourself that leg 1 to leg 2, there was a small pullback sometimes, and then sometimes the pullback was even bigger. Maybe it was a 50 or 60% retracement level rather than a small 38. And then sometimes it seemed like it was maybe just a 23% pullback, and then number 4 pulled back, and it might have been a 50 or more pullback before it went up to leg 5. Elliott wave is always different, and that's why I don't use it as a definite signal to trade. But where is the chart right now? You see this pullback, no double top. This pullback, no double top. This reversal pattern, head and shoulders. Reversal pattern, head and shoulders. Reversal, no double bottom. Price fell off here, no double top. No double top. Head and shoulders pattern, no double bottom. No double top. Maybe double bottom, head and shoulders pattern. We're going to keep going over these patterns because this is the basis of trading. Until we can read the charts, we don't know how to enter or exit trades. I never want you to lose money because you didn't know what was going on. But once you know what's going on, you can write your own story. Ring that bell.